Hello traders and welcome to our WMoptions market review for the week of May 2nd to 6th. A U.S. rate hike next month is probably off the agenda after Friday's labor data came in bad. The non-farm payrolls reported a mere 160,000 new jobs, while labor force participation came in at 62.8%. That's 0.2 less than last month. The only good news was a slight increase in hourly earnings, which was up 2.4%. The USD dropped on the data, and the S&P fell below its 50-day moving average. Asian news this week was led by Australia's interest rate hike cut from 2% to 1 3/4, pressuring the Australian dollar down against most peers. Most data from the land came in positive as the week progressed, with retail sales up by 0.4, the trade deficit falling even better than expected, exports up by a surprising 4%, and a construction index that rose from 45.2 to 50.8. That is from contraction to a definite expansion. In China, on the other hand, exports fell by 2% and imports by nearly 11%, as the nation's economy seems to be ignoring the government's massive stimulus efforts. On Thursday, the Caixin Services PMI came in well below expectations and February's reading. And prior to that, the manufacturing PMI registered another month of contraction. In Europe, the Commission has reversed GDP growth forecasts a tenth to 1.6% and inflation 0.3 to 0.2%. Meanwhile, Central Bank President Mario Draghi is accusing Germany for a decade-long investment shortage of more than 5%. Global PMIs released this week were disappointing, with the zone's manufacturing PMI propped up by positive performance from the weaker countries. Germany's was down, as were France and Britain's. Service and composite PMIs reflected the trend, but not enough to prop up the unions. In commodities, the Wall Street Journal reports that $270 billion worth of oil development projects have been put on hold due to low profitability. Prices were given a momentary upward jolt by more bad news: huge wildfires in Canada's oil-producing region of Alberta. Nearly 90,000 inhabitants have been evacuated and production has been closed down. This morning, crude demand in China was helping push up prices as independent refineries created a backup of oil tankers in major ports. At present, WTI is consolidating around the 44.50 mark. Gold had a dip over the weekend but edged back up on Friday's U.S. labor data. It's once again failed to approach the 1,300 mark, and the trend seems to be a weekly down. Highlights ahead include China's trade and foreign exchange data on Monday, plus a meeting of Eurozone finance ministers. On Tuesday, China will be releasing consumer and producer price indexes, and the Bank of England will hold a monetary policy meeting plus interest rate vote. Finally, Friday, U.S. retail sales numbers and the EU's ultimate GDP reading for Q1 for this year. Stay with us throughout the week as we bring you our twice-daily market reports, trade ideas, and much more. And meanwhile, have a great trading week.